My name is Justin Botillier, CEO of Calyx CPA, based here in Medford, Oregon. So this is our third webinar that we've done, really giving people in the cannabis industry the opportunity to ask questions about going forward, especially in light of the potential rescheduling of cannabis from Schedule 1 to Schedule 3, in the wake of Trulieve amending their tax returns and getting refunds, and kind of not knowing how the IRS is going to respond to rescheduling and 280E no longer being applicable to the cannabis industry. So maybe what we should do, I was hoping Nick would be on this call, but it doesn't look like he is. So I'll go ahead and just kind of provide our perspective. And that is quite a bit in line with what other tax professionals or in the industry have been talking about. And still, Trulieve's position is somewhat unknown. I think there are other businesses in the cannabis industry who have started to refuse to pay taxes on deductions that were excluded by 280E. There's other businesses that have been filing for refunds. I've heard that there are businesses that have been filing for refunds and other businesses besides Trulieve filing for refunds and getting those refunds. So we're kind of offering our clients like kind of a spectrum of opportunities here. Probably the most conservative would just be to file what's called a protective claim for refund. Right now, the statute of limitations are expiring for tax years 2020. And so we're recommending that in order for people to keep the statute of limitations open, for them to claim refunds in the future, they file for what's called the protective claim for refund. And the reason why we're saying all this is because the IRS has not said one way or another, what they're going to allow in terms of being able to recapture deductions prior to 2024, when we suspect that rescheduling will occur and 280 will no longer be a consideration. Meanwhile, there are those companies that are amending for refunds with the argument that there might be some constitutional injustices that at some point will be relitigated, and they're very bullish on the idea that the Supreme Court will rule that the CSA's applicability to states with cannabis drug policies should not apply, or the federal enforcement of those states is somehow unconstitutional. And we definitely have more to talk about on that, but I would like to get to hear from for right now, Brenda, you're the only one who is on the call, and so I was wondering. I'm sorry, Brenda. I said Jennifer. Jennifer
happens all the time.
Jennifer Benda. I apologize. Do you get called all the time?
I get called Brenda all the time.
Oh no!
She's my alter ego.
Well, I apologize. Anyway, would you be open to maybe giving us some new information, maybe something that our audience might not be privy to that's happening in the industry, and like kind of your perspective of what the industry should anticipate?
Well, I think there's a couple things that I am thinking about while you are kind of running through this background. And one is, your comment that we don't know what the IRS is going to allow with respect to these refund claims. I mean, number one, the fact that people got money does not mean that this is a done deal or that the IRS has agreed these positions are okay. So I get calls from clients where they're like, oh, truly won their refund claim, and what do I have to do to get my money? And that's just a complete misconception about what's actually happened here. I speak very often with IRS counsel on 280E cases and have been involved in litigating a lot of issues, getting some concessions on big issues that we haven't had to litigate. And I will tell you that I would be surprised based on those conversations if the IRS all of a sudden is like, oh gosh, yeah, you guys are right. I think they are going to let this work itself out in the court. And that may take going all the way to the Supreme Court. It may take a circuit split before we actually get final resolution here. And people need to remember that it is widely acknowledged and I think stated in Truliev's materials and other materials that the positions that they are taking are called what we refer to as reasonable basis. And that means there's about a 20 to 30% chance of success, which means you're just kind of arguing something that's not clear in the law. And there may not be a lot of authorities actually supporting the position. There can't be contrary authorities in order to be a reasonable basis, but there may not be a lot of authorities out there. And so I think how each company proceeds, and then you have the downsides that people aren't talking about. You file a refund claim, you may have to go through an exam. The IRS controls the timing of when you may have to file a district court case. It puts you kind of on their schedule. And so, how much of a budget do people have for these things? How much are they willing to accept a penalty if this really goes badly? Because there is an erroneous refund penalty for just filing a refund claim for which there's not reasonable cause. And so, all of our clients have to look at their different, place in the world and figure out which of these paths they want to go down. And it's a hard decision. And there's a lot of peer pressure and all that stuff. So it's a really hard analysis. But there's a lot of information out there to help people make this decision.
Yeah, so it's going to be a while before we hear from the IRS in terms of what they're going to allow. I feel just from my experience working with the IRS for all these years that once they reschedule, there's going to be this whole phase of the IRS having to rewrite the rules or put in regulation. I'm sure, Jennifer, you have more of a technical term for it, but chances are to be kind of like in 2024, 280 no longer apply. Okay, you can go forward, but the question is, what can we do to go back? And I do want to just say one thing. The reasonable basis is not that there would be a 20 to 30% chance of success, but that you have a reasonable base. Your reasonable basis is that you have a minimum of 20 to 30% chance of success. So assuming that you have you're moving forward with the idea that you have at least that, then you have reasonable basis to amend for a refund. So I just want to be clear. I don't want to say like there's only a 10 to or 20 to 30% chance that it would happen. And then also with proper disclosures in the tax returns, as far as my understanding is, and I'm never, I don't know what I don't know, but there's protection for suffering those tax penalties if you have filed the proper disclosures and you do in fact have reasonable basis. But
the rules are different based on whether you're filing a refund claim or filing a current, like a 2023 or 2024 tax return, taking that position. So I think that's something people need to understand as well.
Okay. Okay. And then for those of you who are in the audience today, if you want to ask questions, I think we'll probably just continue to banter unless you want to ask questions, throw it in the chat and we can go over those questions. Some of you may be completely new to this. I don't know who on this call has not heard one way or another you know, the actions being taken by the industry. But
Before we move on, Justin,
go ahead, Jamie.
Jennifer, would you mind explaining a little bit more about the difference between the current filing and the refund claim, if you don't mind? That's something that's new to me, that there's different rules there.
So the disclosure excuse from penalties is in 6662. And that's the substantial understatement penalty. And that applies when you file a return and the IRS says you should have reported more tax on your return. And if you have a reasonable basis and you disclose it, that can excuse you from that penalty. Mm-hmm. When you have a refund claim, substantial understatement penalties don't apply. And that reasonable basis plus disclosure excuse is not in the 6676 penalty. The relief from 6676 is reasonable cause, which, you can build on reasonable basis. Mm-hmm. But it's not as clear cut.
Okay.
My concern, yeah.
It's similar, but not quite as less of a home run, you might say.
They're related, but the same language is not in 6667.
Okay. That makes sense.
So yeah, I mean, people who adopt more what we would consider this reasonable basis action, I guess you could say. What do you think, obviously people are taking the risk that there could be an exam and therefore they would need to go to tax court in order to appeal, or and somebody ultimately is going to take it up unless the IRS just doesn't do anything, right? Because sometimes that happens where the IRS will just ignore something, and then,
that happens all the time.
So for us in smaller businesses in the cannabis industry, vast majority, under a few million. It's not necessarily small for the average business, but I would say that our clients are average from the dispensaries anywhere from under $1 million and we have a few that meet that $29 million threshold. But I wonder are they going to be targeted, or what do you think? What would be the IRS? It seems to me like the IRS should be going after these these companies that are more high profile. Or do you think they'll target smaller businesses because they know that they won't be able to afford the attorneys potentially to defend them? I'm just curious if you guys...
I don't give the IRS credit for being that discerning. They will, I think one of the things I do see is that they want to treat taxpayer, they want to take a position and apply it to everyone. And so if you're a large company that's taking this position and you're a small company that's taking this position and they've decided they're going to deny these claims, which I think is likely, the number doesn't matter. They're going to try to take a uniform position. And that's something you see, all the time in dealing with disputes with the IRS. And if they don't catch something, then they don't catch it. But I think if they're aware, they're going to try to use a uniform position. I think that's the way that they would handle that piece.
Okay. Well, we got a few questions. Let's see. Well, one question is what are some of go back to the first question, but let's start with the second question. What are some of the reasonable claims you've seen used? And Jennifer, that would be a good question for you as well. Sorry to put you on the spot, but
I'm not privy to all these opinions. So
yeah, for understanding what has been proposed is more of the constitutionality of the CSA. and the fact that Congress, it's been clear since, say, the Cole memo, that Congress's intent was to give the states sovereignty over their own drug policy. And so,
well, the Cole memo isn't Congress; it's just DOJ. So,
okay, DOJ.
yeah. So the only thing that Congress has done to take any position on marijuana policy is defunding prosecution of medical businesses.
Defunding, right. So those, and that was the other one. So I guess Congress would have been defunding for prosecuting medical cannabis businesses, and then that would be more of like an executive branch type thing. I don't know, like all my political law, but so it seems to me that there's been kind of actions that have kind of indicated that states should have sovereignty over their own drug policies. And it really is the Supreme Court that's been kind of the holdup with the Gonzalez versus Reich litigation back in 2005. And since then, the whole time, the CSA has applied all the federally across the board. And as far as I know, I don't know if it's been retried. But some people are saying, like, if that same lawsuit had gone back to the Supreme Court with today's cannabis environment, with many more states having drug policies, and having a much more conservative, originalist Supreme Court, the outcome would be different. And that once a case gets back to Supreme Court and retried, and potentially the CSA it would be deemed that the CSA should not apply for, or should have not applied to the states with their own drug policies, then 280E would have been deemed somewhat unconstitutional, or it would mean that these companies should have not been subject to 280E. So that's my understanding of kind of the argument for the reasonable basis, and what people are essentially going to be waiting for, assuming they do go forward with like protective claim for refunds to keep the statute of limitations open, or even amending tax returns. But do you have another perspective, Jennifer?
Yeah, I do. I think that an attack on the Commerce Clause is different than an attack on 280E. And so the court could very easily find that the CSA has been unconstitutionally applied, but I do not think that automatically means 280E does not apply, because the Congress's constitutional power to tax is pretty broad. And so you're kind of saying, like, oh, which tips the scales here? Is it the 16th Amendment or is it the Commerce Clause? So I don't know how people are taking, the Canna Provisions case and taking that all the way to then 280E doesn't apply. Also, my understanding is that if we do have some sort of constitutional upheaval, if there is some determination that the Constitution has been violated, that doesn't have a retroactive effect. It's just a change in the law going forward. And so I think, you mentioned, is the IRS going to let us go back and get refund claims after rescheduling for prior years? I just don't see any world where that's a possibility, or there's the IRS is going to say the law is the law. It changed on the day it got moved to Schedule 3. And I've been reaching out to the accountants that I know to start the conversation with the IRS, which I've already kind of initiated, as to what are the issues you're going to have to deal with in that year of the change. One of the issues is, how do you apply 280E as of some random day in the middle of the year? Are you going to use a cutoff method? Are you going to use a daily allocation method? There's all kinds of games that people could play there, right? And then everybody's going to want to probably change their accounting method. There's all sorts of issues that you're going to have to face in preparing returns. And Werfel said at a meeting a couple of weeks ago that he was willing to work with the industry to address these things. And so I'm going to start putting even more pressure on the IRS to start these conversations and get some clear guidance so that we can, not have to fight about these things forever and ever.
Yeah.
I would imagine that it would be like anything the IRS usually does. Like if somebody dies in the middle of the year, gets married in the middle of the year, the IRS is like, that's for the full year. Like from having worked with, I don't work closely with the IRS, but having been doing tax returns for a very long time, I suspect that they'll just say 2024, it doesn't apply. That seems the most reasonable, right? And there is some reasonableness happening, and obviously doing like a 280E cutoff mid-year is absolutely unreasonable in terms of the amount of like work that we would have to do in order to go forward with that.
Well, that's not really the IRS's concern. Their concern is applying the law and, trying to do things for convenience. Yeah. I mean, maybe that will happen, maybe not. I do think that I would be surprised if they just said whatever year, go back to the beginning of the year and 280 doesn't apply for that. That would surprise me. I'm not saying it's not possible, but that would surprise me.
Yeah. I don't know. I feel pretty. We'll see. That'll be a good one. Maybe we can take some wagers on that one. That's an easy one. That's an easy one to take wagers.
Yep.
I'd love to hear like how about your perspective of this speculation that I have, and that is that there will not be a court case that will be taken to Supreme Court. What will probably happen is the IRS will just allow the statute of limitations, or the government will just allow the statute of limitations to run out, never having actually finished the conversation, but won't necessarily enforce amendments for refunds and make it difficult for that, but more rely on the industry itself as a deterrent to not amend for refunds, and then wait 3 years down the road, and then maybe a Supreme Court case gets through, maybe it doesn't, but nothing will ultimately happen until the conversation just kind of fizzles out over time. And then everybody will have lost their opportunity to actually get their refunds because they didn't do anything. That's my...
I mean, the only way... I mean, the government... You said the government is going to let the statute of limitations run. Well, the statute of limitations is running. The only people that can change that is the taxpayers. And so the government can just deal with whatever taxpayers try to preserve the statute of limitations. They, once those refund claims or protective refund claims are filed, the government has to handle them at some point in time. And so I think that taxpayers really have more control over that than the government.
Right.
I think maybe Justin was maybe your point that like there will be a relatively small number of taxpayers who maybe do something about it, and they might just allow those taxpayers to have done what they did and not talk and not speak to the others, not make it a more widespread, everybody addresses the issue, and kind of let those taxpayers that did something get the benefit without, and kind of like take the lesser of two evils, so to speak, which is the whole industry going for refunds.
That's exactly what I'm talking about. I think just from my experience that the IRS, there may be a current issue, and in 2024, say they allow us to go ahead and prepare tax returns without taking into consideration 280E going forward, nothing may happen. Trulieve will get their refunds undisputed. Other taxpayers who have filed for amendments might get their refunds undisputed. And pretty soon, less and less people will have the availability to file for refunds as they wait for the IRS to make it, to make a decision or some sort of other federal action. And by that time, if it was to happen years from now, they wouldn't have the opportunity to file for a refund anymore. And that's kind of my Like, I think that's most likely what's going to happen. But there will be those people who maybe they do get in exam, they get their claim for refund disputed. They may end up clawing back refunds. But I'm very curious what's going to happen with Trulieve, for example, and other companies that have filed for refunds and received their refunds.
Yeah, I think that's ultimately like kind of the crux of the whole conversation, right? Is that there's this opportunity, and it's absolutely a risky opportunity.
Yes.
And I think that's what like Jennifer's really trying to get at, is deterring people from thinking this is like, Trulieve got their refunds, this is good. Like, everybody go run for your refunds. It's like not a risky situation. It absolutely is a risky situation. We don't know how it's going to turn out, but really the issue is that there is, from some people's perspective, this reasonable basis, this small enough percentage, right, or big enough percentage of likelihood that this argument is valid, that you can file these returns. Hopefully, as Jennifer mentioned, which was a great point, like, it's not the same for amending as it is for filing those current returns in terms of whether those disclosures and that reasonable basis is going to protect you. But it feels like if you have a really, thorough disclosure with a well thought out position, I think like there's a bit of like reasonableness that the IRS will also probably take with regard to these returns. Like, you didn't just throw an amendment and ask for and ask for a refund with like no backup, right? You thought it through. And so hopefully you're protected from those penalties, but of course that's one of the risks as well. And then maybe you get that refund later on, you get audited, there's an exam, you have to pay that back. Plus then of course there's interest that you have to pay now at this point. So that's another risk. And it's just, kind of weighing that risk benefit. Like, what can you do with that money in the meantime? If you do get those refunds, how can that benefit you? Do you feel comfortable enough that this is reasonable? Like, and are you prepared to like pay the consequences should they happen? But then if you do nothing, it's only a risk. You're just going to lose that opportunity, right? So it's like, where are you going to land on that spectrum? You're going to at least protect your claim for refund should something change. Are you going to go ahead and amend and maybe just take advantage now and use that money to your benefit now, maybe, and you could hope nothing happens, right? Maybe something bad will happen. Maybe you don't take it to court and you just accept the change. Should that happen? Should you get audited? Should you get a change? You just accept it and you pay that back, that refund you may have gotten. There's this whole spectrum, right? But it feels like there's a lot of like movement right now. There's a lot of people taking some sort of action to reclaim some of that money that they've arguably overpaid these last several years.
Yeah, it's definitely a risk reward analysis. I mean, we've got clients who only lost $10,000 worth of deductions in a year, and then we have clients that have $1 million of deductions they lost, and so it's kind of like, it's kind of up to you. I mean, we're not doing these for free, and then there's the potential of the penalties and not getting a refund at all to getting a refund clawed back, and then they want interest. So
there's a spectrum, and we can't really speak to how it's going to play out. And as Justin mentioned, it's and Jennifer also spoke to it, like, it's going to take time. It's going to take time to see how this is going to play out. If it does go to court, if they do dispute Trulieve's, which I think a lot of people expect that Trulieve, they issued the refunds, they are gearing up to dispute those refund claims, but they don't want to be paying, they don't want the interest to be in their house. They want it to be in the taxpayer's house, right? I think that's like a lot of people believe that. But it really could play out so many ways. And all of them are very time consuming, and that statute of limitations is ticking away no matter what, right? So it's kind of it's urgent, I think, for taxpayers to decide how they're going to address the situation. And the super important thing is that they do it, knowing the risks, knowing and being comfortable with those risks. But we are a pretty, this industry is a risky industry. So there's probably a lot of taxpayers willing to, if they really are able to understand those risks and not just kind of be kind of like scared away from doing it, you want to really I feel like it's important to talk about the benefits that could happen too. Because a lot of these taxpayers may be okay with taking that risk and doing and moving forward with one of these positions. So that's all I
Yeah, and it may very well be that the IRS will wait and assess the situation. Like, for example, when we started using 471C back in 2019 for 2018, 2020 for 2019, the IRS did nothing about it until they were pressured to do something about it, and then that's when they put that like janky regulation into the system, and that acted like an incredible deterrent for it. It was an incredible deterrent. Most of the accountants that were actually privy at all to 471C, a lot of them just stopped. They're like, oh, I guess we're not going to get to use that anymore unless you look deeper. But that's a different conversation. So I kind of anticipate, though, something similar. Like the IRS is going to be like, okay, 280 doesn't apply in 2024. And then they're going to wait. How many people are going to, is this a loophole for getting refunds now? Like, are all the accountants, like, are all these cannabis businesses going to go get refunds, or are they going to like look and see like, oh, I guess they want $1 billion worth of refunds this year. Oh, is it worth it? Should we start this? Should we start this conversation by going after True Leave? Or maybe it's only, $100 million worth of refunds. And they're like, oh, okay, we're just going to not do anything about it.
That's easier to pay. Or,
I kind of feel like, I don't know, it can go any direction. But one thing I do know is that I'm always, for 20 years, I've been told, like, it's not a matter of if, it's a matter of when, and you're putting your clients at risk, and just all these things, like into various other tax matters, not just cannabis taxes, but just the scare tactics that's been happening for years and years. Now, granted, the IRS was underfunded for most of that period of time, and it's a completely different environment now. So I don't want to put my foot in my mouth for sure. So so stay cautious. But I just, I think I've said my point.
I think it's just important. Like there's the ability for your tax preparer to be kind of an advocate for you if they're, well informed enough. But there's also, of course, the ability for them to steer you wrong in either direction. Right. Like it's really important, and you understand the position. Like if it's not us, whoever it is going to take for you and feel comfortable that it's well thought out, that it's informed, that the disclosures are there, trying at least to protect you. Right. All of that stuff is super important. But you can kind of have someone that's advocating for you. You can have someone that's kind of doing the opposite, depending on what kind of tax preparer you find in this industry. We might speak a little bit to quickly the notice of proposed rulemaking that was released yesterday.
There's one more question.
Okay.
We have time. Okay,
let's do the question first.
Yeah, so the other question is, so the question was, can you clarify what you mean by filing for a recent 2023 or 2024 versus historical filings? Okay, I think that was just, we were just talking about how, like, when we reschedule, or when cannabis gets rescheduled, we're in 2024 now, and therefore in 2025 it'll be likely that at least part of 2024 will not be subject to 280E. The IRS definitely be like, hey, in November it finally was actually rescheduled, so therefore you get 2 months of no 280E, or they'll say like, no, 2024, 280E doesn't apply for 2024, which will then be in 2025 when we're preparing tax returns for 2024. You will no longer be subject to 280E. But right now in 2023, you are subject to 280E, and therefore it needs to be addressed. And then the question is now to amend or not to amend 2020 returns, because there's a 3-year statute of limitations, and right now the 2020 returns it's running out. So and it's run out for many people already, but depending on who you are and when you filed your return, you may still have the statute.
Well, there's a caveat on that.
Okay.
If you haven't paid your 2020 tax, your refund tax,
that was the other
it's still open. Yeah,
that's true. Yeah,
that's true. Now, if you haven't paid, or was it when you paid?
So if you paid after the 3-year statute has run, you have 2 years from the date of payment. That's the easiest way to think about it. So we have people who are on installment agreements or are trying to get on installment agreements and haven't paid, maybe not 2020, but 2021 and 2022 for sure. And there's no reason to file a refund claim if you haven't filed the tax. There's nothing to refund. Or if you haven't paid the tax, there's nothing to refund.
Right. But wouldn't it still adjust your balance due though, Jennifer? Right? Like
it would, but you have a lot of time, like there is no.
You're saying you don't have to move forward now because you haven't paid.
Oh, because if you owe and you haven't paid, you can amend.
You can keep. Yeah, we're still amending 2017 and 18 returns for changes that people should have taken if they paid those taxes within the past 2 years, which happens all the time.
Yeah. And Jennifer, am I right in that there's also like another layer to that where it's if you are going off of like the payment statute of limitations, you can only recoup what you've paid in the last 2 years? Is that right?
Correct. That's correct.
Yeah. So it's a pretty. We usually just speak to like the very general because it's like it gets kind of nuanced and like complicated. But thank you for clarifying that. That is it's a great point. You haven't paid your statute of limitations. Isn't picking?
It's open.
It's
it's open. You have a refund statute that's open. Yeah.
Right.
Yeah. Okay. Awesome. Well, thank you very much. Where were we going with that? I got lost.
Oh, you were answering the question. I think maybe that question too about recent versus historical filings was maybe speaking to the different protections you have against those penalties. That's what Jennifer was talking about, where if you're filing an original return, there's an understatement penalty, and that reasonable basis will protect you from that penalty, but there's not necessarily the exact same language for reasonable basis with regard to like erroneous refund claims. It's a different kind of
That's not what I was talking about, but I'm glad you pointed that out.
I think that may have been what that question was, but I think it was
okay with that question. Yes, that was it.
Yes, that was.
Right on.
So there's a different level. It sounds like it's similar wording, and there's a chance that reasonable basis could still protect you for sure, but it's not necessarily as as surefire as an original filing.
Yeah. Okay. Let's see. I mean, we could probably. Oh, Jamie, you want to talk about the DOJ?
Yeah. Do we feel like we answered Greg's question though about what reasonable claims we've seen used? I wonder if I know we went. You gave kind of the high level overview of what the sort of position we're taking is. I wonder if everyone feels like they understand that summary.
Yeah, and there's like for me, like just the fact, like as soon as we talked about rescheduling, I kind of wondered to myself, what does rescheduling mean? And like they're saying as Schedule 1 that cannabis has no medical benefits and is highly addictive. And so just in and of itself, going from a 1 to 3, does it mean now that it's 3 that marijuana now has medical benefits and is not highly addictive? And all those other years, cannabis was very dangerous, a very dangerous drug. So wouldn't just even that reasonable basis be enough that, hey, federal government, you got your facts wrong all these years. And if you look back, you can see the institutional racism of the prohibition of marijuana, the fact that they just didn't like it, but had no facts to back their Schedule One status up. So to me, there's already reasonable basis.
That's in a perfect world where they also take accountability for everything, for their mistakes, but they'll just change moving forward.
Yeah, I think reasonable basis has to be based on the law, and this is like a scientific element to the law. So I want to, whether a CSA, how you would argue that a CSA argument has reasonable basis under the tax law, like that seems like a really uphill battle. So there's a big long definition of reasonable basis in the regulations for people to read and help understand what that really means.
Okay. Mm-hmm. Understood. Do we have any other questions before we move on to talking about current news? We'll spend like another 10 more minutes and then we'll wrap up.
Yeah, well, yesterday, there was a press release that the DEA officially submitted their notice of proposed rulemaking for rescheduling marijuana. So that process is now, the last couple weeks, was it a couple weeks or maybe a month ago? I'm kind of losing track of time, but a couple weeks ago, I think, was when we were starting to hear all that chatter about it, but nothing had actually happened yet. It was all like hearsay, I think, at that point.
The DEA just said, "Oh, well, yeah, we'll reschedule."
Yeah, we're going to be doing it, but nothing happened
at all.
A lot of people thought that they actually had done something, but nothing had like officially changed as far as I know at that point. But now the notice of proposed rulemaking has been submitted, which means this long process of this potentially becoming, or yeah, I mean, there's a public comment period, I think, in the next 60 days. You can request a hearing. That's going to be happening. Then they have to like respond to all the comments. And then there's, I'm not super familiar with this process, but it can take a while to get to the final rule. But this is kind of the first real step in this rescheduling actually happening. And so it's only May. There is a good chance it could be done, I think, before the end of 24. But I think that these processes, I think it's not uncommon for this to take a year plus as well, this type of process. So,
Jennifer, do you have any insights in that? Like a lot of people want to know timeline. I'm just 24, but
yeah, the only thing I would add is that there's a potential for people to file litigation to hold all this up as well. So yeah. I don't fully understand that aspect of it, but it's there are a lot of things that could delay, is what I would say at the end of the day.
How does that? And if you don't know the answer, I'm sorry we're putting you on the spot so much, Jennifer. But how does that litigation work? Like, who is litigating who in that case?
It's parties who think they're harmed by the rescheduling can bring a lawsuit.
Oh, okay. Interesting.
Yeah.
Interesting. Okay.
Yeah, well, I mean, geez.
Good to know. I know a lot of people.
Yeah, I mean, there's a lot of forces out there that are definitely gearing up for that battle.
Right. Yeah. Interesting. Okay. So it's hard to say. This is one step. It can be, I don't know. I don't want to put wrong timelines, but I think from my understanding, like as little as 6 months, as much as, who knows, ? Like 5 years before this is resolved, maybe longer.
Certainly, if the IRS does come down on the regulated market, I think about how right now the unregulated, the hemp THCA market, for example, that's insane, spreading across the whole United States, practically in every gas station and market, minute market, untested products, not child safe packaging. I mean, come on, you guys, like focus on where the issues are. Actually, And we'll hear like an update in the farm bill, I hope, pretty soon in terms of like whether or not they're gonna wrap that up. But certainly does harm the regulated market, and it seems like people trying to do things right are always the ones who get the worst of it.
Yeah.
So let's see here. RuPaul says, RuPaul, I don't know if I'm saying your name wrong. I apologize. I like RuPaul. When you say proper disclosures, what are examples? Does this include your financial accounting policies or specific tax forms? Do you want to talk about that, Jamie?
Yeah. When we're talking about that, specifically, we're talking about a tax form that gets filed along with your tax return. It's called the Form 8275, or it can have an R at the end of it if you're going contrary to regulations. So it depends on what you're disclosing. But yeah, it's basically, the idea is if there's something that's not clear on your tax return, or if you want to add a little extra information for the IRS to understand the position you're taking, you can include a disclosure. It can be a general disclosure. It can be very specific with your tax return, explaining anything that is not otherwise obvious, I guess, on your tax filing. And so our firm files disclosures with the vast majority of our tax returns, just to explain exactly kind of how we're approaching maybe our inventory methodology, for example, if we're using 471C in a way that maybe doesn't, that is maybe a little more taxpayer friendly, for example. We'll explain exactly what we're doing, why we're doing it. And it's just kind of very above board. So we're not trying to sneak extra deductions in and just hope the IRS doesn't notice. We're trying to be like very clear that we have a well thought out position and it's informed. And so with regard to like this potential 280E position, the disclosure we have right now is a pretty in-depth, like 3-page long disclosure explaining why we believe there is a reasonable basis to take this position on the tax return. And it speaks to basically how we think the CSA doesn't apply to these intrastate businesses, markets. And so if the CSA doesn't apply to those, then 280E talks about substances specifically, relating to the CSA, class 1 or 2 CSA. So there's a whole argument, and we just kind of explain that whole argument and say this is why we think we have a reasonable basis, and so this is what we're doing. We're, maybe not including we're not applying 280E to this return, for example. I hope that explains it.
Yeah, it's we worked with an attorney to do those write-ups, so it's not just us. But I'd say Jamie's a tax extraordinaire. Sorry, Jamie, putting you on and she is really excellent in putting that stuff together. So I think like it looks good. Let me put it that way, from an optics perspective. So, well, right on. Hey, Jennifer, thank you so much for participating in this conversation.
Glad I could pinch hit for you.
Yeah, thank you for filling in the gap for attorney representation. We're supposed to have a couple more attorneys that didn't show, but I hope that doesn't. You're a good representative for the the industry.
Yeah.
That you showed up. Okay, very good. And Jennifer, you're with
Holland Hart in Denver.
Holland Hart in Denver. And so you can, if anybody here wants to look Jennifer up, please do. I'm sure you can be found online.
I will, I'll just send my email here for everyone.
Yeah. Right on. Well, thank you so much. I think we're gonna wrap up here. And so if there's any final questions, please let us know. Otherwise.
And thanks, Justin. Thanks, Jamie. Nice to meet you.
Yeah, thanks, Jennifer. Yeah, really nice to meet you too. Justin, maybe do you want to share your email address too, in case people want to follow up with questions as well?
Email us. We are easily found online. Calyx. All of a sudden I can't give you my email. There's mine. Calyx CPA. Just you could easily Google us. We can
CPA.com.
and I think everybody here is on our mailing list. So
yeah,
right on. Jennifer, it'd be good to connect at some point in the future too. All right, you guys have a great weekend.
Bye, everybody. Thank you.